Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jodie Gunzberg, Managing Director at CoinDesk Indexes, to discuss Bitcoin's recent volatility and drivers of the crypto index. Jodie, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
Is the volatility Bitcoin is experiencing now similar to what you have seen in other asset classes? Are you still comfortable with the asset class in general?
Absolutely. I've seen this kind of volatility in hedge funds and commodities. Both were emerging asset classes that I've worked with before. And I see some signs that are visible of successful emerging asset classes. For example, we're seeing the adoption by the institutions, some regulatory clarity, product availability, and again, very familiar volatility patterns with increases in volume and liquidity. So I'm extremely comfortable with what we're seeing now in Bitcoin.
What are the drivers of the crypto index performance and how are they influenced based on the index design?
Yeah, the drivers of the crypto index performance are highly similar to the cryptos themselves, but can vary based on the pricing sources and consolidating algorithms. And for the indexes that have more than one constituent, the weighting and the rebalancing or constitution can also have a big impact.
Drivers of crypto are defined by the risks that include market risk, technology risk, regulatory risk. What is another major return factor that you look at?
Yeah, one of the other major return factors I would say is from the network effects. And what I would say is while the limited supply may create a scarcity value, and that's similar to what we see in commodities and perishable versus or replenishable versus non-replenishable goods, what we do see is a huge potential upside in the use for transacting goods that may drive more future growth.
And Jodie, explain to the audience why it's positive when assets experience volatility and prices come down like we've seen in crypto recently.
Yeah, well, a lot of times the down markets provide a test. And again, in other down markets, what we've seen with the volatility is proof that it works. So we've experienced, for example, after the global financial crisis, that was a time where many newly launched hedge funds had a chance to perform well in that kind of environment. So what we're seeing is a test of the systems. The cryptos are passing the test. There's nothing broken with it. And this volatility just comes with some of these risks. Like, again, you said, the market risk, the technology risk, regulatory risk. It's all part of the emerging asset class.
Do you think crypto is too married to what happens with Bitcoin? Do you think some decoupling needs to take place there?
There's different fundamentals behind each of the coins. I mean, even if you look at the two major ones, Bitcoin and Ether, you see that there are four different value propositions. And that's where you'll get some of the divergence in the performance, or they'll have some lower correlations. But in terms of looking at a Bitcoin performance to a broader index, if it is a market cap weighted index, you'll see, because Bitcoin is the majority of it, that the correlation will be high. Very similar to technology in large cap stock market weighted indexes, or energy in commodity world production weighted indexes.
All right, Jodie, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks for having me.